Good turnaround Tuesday, everybody. How's everyone doing? Hello, Face. How are you? Hi, Sharap. Hamid, how are you? Everyone doing okay? Turnaround Tuesday, a few ideas. I'm attempting the short dollar up here in the Dixie. Might get one more stab up here for a 3. So looking at that, right in between 61.8 back, 78.6 back. If we get a break, you want to take partials around 780. So look for 785 or so, look for 50. You have to risk the highs on this. Okay, so the other currency with the euro being steady and cable under pressure would be euro for a long, risking the lows here. So about another 50, looking for a turnaround Tuesday. Okay, now yesterday I talked about the oil and was talking about the big descending triangle that we have here. And, it depends how you draw the trend lines. If you take it off this high, we're right there. And you can see how we went into these moving averages and short term. You had a little 2 drive there, 1, 2, pretty, this is a 15-minute chart. There still could be another attempt up here towards 670, but I'm going to most likely look for uh, some type of bounce today. The big event, everyone, and it's probably a good time to mention it. Things will be very thin until after Labor Day. It's not the time to be real aggressive. It's never the time to swing for the fences, but definitely not now in thin market conditions until the hedgies get back from the Hamptons after Labor Day. The big event, market moving event, is going to be Powell at Jackson Hole. So that's what the market's waiting for this week. And we'll see what kind of news he makes Thursday or Friday. Okay, so a couple other things. With the euro being the preferred long, it's because euro pound's rallying. Something I'm looking at here in euro pound is perhaps we're setting up some type of head and shoulders. Okay, so I have this 90 area, 91 area as a neckline. I'd look to fade strength up around 92.20, 92 and a half. Okay, so although I know Steve will remember, but for months, I was looking for 94 for a third drive. Here was 1, 2, 3 on the weeklies, and it didn't quite get to 94. There's an outside shot of it, but after last week's candle, I'll give selling pop a chance because if we take out 91 right here, I think we could see 89 anyway, 89.10 as a possibility on EG. Okay. Was there anything else I wanted to talk about here? So the S&Ps, we'll see if Powell can goose them and clean out some of the shorts over this level right here, and maybe just go to 60. So I know this is kind of a bull bear line for Steve Volge for a few weeks, 29.60, and Steve is back, which is great. I put out a tweet the other day that listening to Steve every morning for over 2 years now has made me a better analyst and trader. So I think that I know it's done that for me. So I bet it's done it for you guys too. Who's become a better trader listening to Steve every day? If anything, you
Me,
learn to be.
coach.
Yeah.
Good morning.
Yeah, buddy.
Yeah, I said me. I've become better listening to
Oh,
Steve.
have you? Okay.
Of course.
All right. Yeah, and you know why he's great balance for me still because everyone has to know their tendencies, right? And my tendency is to be early. That's why I always just put a toe in the water first. But when you listen to Steve and he talks about needing confirmation, it gives me balance to not be aggressive early. And besides, his analysis, but his patience is something I really admire. It's not easy to do. So great to have Steve back. We also have a timely guest. This guy's a China specialist. His name's Chris. I don't know if you follow him on Twitter at Balding's World. I believe he lives in Shanghai. He's in California now, but going to be a very interesting interview with what's going on. I'm going to be asking Chris about the yuan, and the yuan is really something that we have to pay attention to. It was really the trigger on the breakout that we had this day for the beginning of the correction in the S&Ps. And this is what gave the S&Ps big relief. But when you look at it, all we did there, look at that, pulled right back to the breakout. So I don't think you're going to have an all clear in, risk until we negate this breakout. So this is something like, Blake talks about that weekly breakout in gold and how significant it is. This is pretty significant, okay, because this was a real big psychological and technical level. And, if you wanted to just be technical, you could say that we're looking at 760, 750 for a measured move on the yuan. So this is really the key. We start taking out the highs of this week right here. I don't think the market's going to like it. As long as there's hope that maybe that's it, that's what I'm going to ask Chris about it. Chinese said in here they weren't going to weaponize the yuan. But as soon as President Trump talked about putting more tariffs on at the beginning of September, we had this big surge and basically weakness in the yuan against the dollar. So we paused on that. We paused on the tariffs for early September, but we haven't had a commensurate pause by negating the breakout in the yuan. So, you could listen to the news about progress. If you want to know how the trade talks are going, this is what you watch. Okay. Whatever the reports are on CNN or Fox or, Bloomberg, whatever your news source is, this is the truth right here. What's happening with this currency? I think I saw on Skype, Blake was saying Mark Chandler, and we've had Mark here a few times. He's great, and he's talking about being short yuan, long gold. So I like the short yuan of the equation right now. I don't think I think there's going to be better entry in gold a little bit down the road. But I don't want to. Mark's very good at calling the fundamentals in different markets. I think that's a pretty bold call for Mark. I rarely hear him talk about gold. So that's interesting. And our whole team is interesting. We have Steve Volge back today, and I'm going to hand it over to the most interesting man in the world, or at least in Scottsdale, Blake Morrow.
Good morning, Coach. How you doing?
Good, buddy.
Well, you're really happy to have Steve back. I'm genuinely excited as well now. I wasn't excited until I heard you, and then I'm like,
yeah. Well, I know. Well,
yeah.
You know how sappy I am. Right?
Yeah, you are, man. You're sappy.
But but you're the most interesting man in Scottsdale, Arizona. They're going to put you on some kind of beer label, bro, up there, craft brew or something.
Man, I'll tell you, I feel like I'm a Modelo spokesperson sometimes at my house. It's like they're it seems like our drink of choice around here. It's like every time I look in our garage, we've got 3 cases of Modelo beer, and I don't know where it all comes from. I think the neighbors keep bringing it over anyway.
It's because you're a peso trader, man.
I guess. Yeah. Speaking of the peso, speaking of the peso,
what a segue.
Yeah, what a segue. So I've been monitoring this cup and handle pattern, and actually I blogged about it yesterday on the if you guys get the chart of the day. This is a very messy chart, and you don't look at the peso and go, wow, that's the prettiest cup and handle I've ever seen. But I always tell people, when you're looking at a chart, just blur your eyesight a little bit, and then it gives you the general thesis of what's happening here. So like in this case, if you look at you just think about just think about what happened here. Even though you can say, well, it's so messy, but no, it's basically developing a base, rallied into resistance, knocking its head up against a resistance multiple times, and then finally breaking out. So this cup and handle actually points to a move that looks somewhat like that. But first things first, you got to get over the 2020 resistance, and but that's huge. If we get above 2020, then something's going on. There's actually a chart that I'm actually a little bit more speaking of the peso, I'm a little bit more interested in, and that's a Euro Mex. And if you take the Euro Mexican peso, why the Euro Mexican peso is really the currency pair I'm looking at more so than the dollar Mex. It's because the euro is a funding currency. So the euro, with the ECB at 0 and the banks go now at 8%. If this currency pair starts to unwind, then that means that we are really seeing probably a risk-off move. So I want to know if this Euro Mex is actually breaking out. If this is breaking out, then there's probably a really good chance the dollar Mexican peso is making a move as well. But this is one that I'm paying pretty close attention to.
And a breakout will be risk off.
Oh yes, that would be risk. That would be risk off. That would be risk off. So as soon as this one breaks higher, I know that I need to start looking at stocks and and just seeing if there's something
I didn't know
percolating there. Yeah, because this is a big funding currency. This is like you sell euros, buy pesos, and when this thing reverses, that usually tells us that the stock market is really buckling under some pressure. Now the FX market's been really quiet, and you're so right, Dale. Going into the last couple weeks of August, the liquidity is going to be really poor. We do have Jackson Hole at the end of this week, so that's that is it, and that's gonna possibly create some volatility in the markets. What can we expect? I don't know. It's if we get any indication from Powell on Friday, if he's about ready to continue to lower rates, we'll see if stocks might have a positive response. If he seems like it's more one and done, we can see the dollar rally and stocks really come under pressure. So and what to do with the dollar up here, I don't know. I mean, we're knocking our head up against some pretty key resistance. This is those spike highs from April and May of this year.
What I found interesting about the dollar is the DSI was 90 yesterday. And I think it's the first 90 reading in a long time, and it's 90 already without new price highs.
Yeah. I mean, I think it's a little frothy up here.
90, and we're not at new highs. That's why I would have thought up there we'd get new highs. Normally, when you're getting readings in the 90s or down into the teens, markets are making new highs or lows, not retracing.
Yeah, I've seen. I understand what you're saying, and it's not. I want to say it's not. It's not common to see that, and I think it's a succinct.
Yeah, it's not a signal.
Observation.
It's just an observation.
But it's a good observation, and that I think that that the risk is that the dollar does, you know, being in a range where we do whip around lower from these levels, but we need some sort of trigger. We need, you know, we need. Yeah, and maybe it's Powell on Friday, perhaps. I
don't know.
Might be.
Everything's a shot, isn't it, Blake?
Yeah, especially this time of year, it's hard to really get too directional on anything at the moment. You know, and I'm very tempted. I'm very tempted to buy the euro down here. I mean, I think the risk reward for a euro long makes sense, but I'm also, you know, aware that if we break below these 60s, I mean, we could trade back down to 110 and a quarter. So I am, you know, keenly aware of that as well. You know, the cable's been under some pressure today. We're bouncing a little bit here, but the pound, very, very concerning. I think the price action here. Am I short? Nope. Am I looking to go long? Hell no. But I think it's I think we are, you know, at some levels that you got to be a little concerned about. One of the things that the market what really happened overnight that I think is worth noting is that we had this pretty aggressive bounce in gold. I was going to buy gold today. I was going to buy gold. I was hoping we would dip down here to, you know, I drew out yesterday that we could dip all the way down to the 618 down here, but I was really looking, you know, this morning I was thinking about it when I got up. I'm like, okay, you know, if gold's trading around this 1480, I'm going to try to buy some. And then, you know, you wake up and gold's, you know, whatever it is, 10, 12 handles higher than I thought it would, you know, off the overnight lows. And I'm like, crap, you know, maybe I missed it. Now that doesn't mean that gold can't come down. It may. I'm just standing aside while I watch it move. Also, the bond market, bonds, if you look at the 10-year yield, I mean, we came back down. That means the bond market rallied again. You know, where's the 10-year? Here's the 10-year. So the bond market came up. You know, you look at boons, you know, just when you think boons are going to break down, boons have come back and they're challenging. Here's the underside of this channel. I mean, the boons should stop here. I'm not trading boons, but I'm just saying if it's going to reverse, it's going to reverse from here. If it is. All right. So for those of you that are, you know, trading German boons, then that might be the look you're looking for right now. I'm pointing it out because I think it's going to move in tandem yields. So if yields are going to rally back, then the boon market and, you know, the 10-year is probably going to pull back from here, from current levels anyway. One of the other things that I'm looking at this, you know, the uncanny strength in the US dollar Canadian. So US dollar Canadian is not wanting to sell off. And I think we've got to pay a little closer attention to it because, you know, I haven't been trading it much, but I think the dollar Canadian is at risk at this point of taking a stab higher towards 134. We have this 133.50, the 618 retracement of this move. See it right here. You know, the 618 of that move comes in, you know, just about 20 pips higher than where we're at. But fact is, we're nudging our head up against resistance here. If we break through the 618, we might actually, you know, stage a rally above like 134. And I think that's starting to build as a risk, you know, maybe as early as today. So I think that's something that we should also be paying attention to. One of the other things is if you think, you know, bonds have dropped and the bonds dropped all they're going to drop and they're going to rally to new highs, which, you know, again, I don't think it's going to happen, but that doesn't mean anything. The bond market, you know, this 10-year, I mean, we could hit another high, do something like this. You know, the 10-year can make another high here. And if it does, that means yields are going to come down. If yields are going to come down, then instead of playing the if instead of playing like the euro dollar to the long side, one of the things that you might want to consider is playing the dollar Swiss to the short side. I'm a firm believer that if the dollar Swiss breaks through 97 again, it's going to be lights out for this currency pair. I think that the Swiss is going to really start to strengthen quite aggressively. We'll be down in the 92 cent range once again. I'm not short the dollar Swiss, but it's something that I'm paying pretty close attention to, just knowing that how close we are to this support down here, this longer term trend line support. So again, that's just something that I'm looking at, not necessarily doing anything with it right now, but I am watching bond yields. If bond yields slump to new lows, I'll probably start looking around at trades like shorting the dollar Swiss, or maybe even shorting the dollar yen, which I've kind of stayed away from the dollar yen the last few weeks. Last couple of weeks. I might have traded it once or twice, but directionally I'm not too terribly excited about the dollar yen. It gave us that false breakdown below 106, and ever since it did that and popped back up again, I'm like, I'm not sure I want to deal with it. I want to see the dollar yen really start to come under pressure for me to, or you'd have to see yields really sell off from current levels for me to be interested in it more on the short side. But like I said, if yields do come down, then the dollar Swiss probably isn't a bad opportunity at current levels. Or if you want to play the euro dollar long, the dollar Swiss might be the better play. So anyway, just a few things that I'm looking at. I heard Stelios's voice earlier. I want to see if he's around and see if he has any. Hey, good morning. So the pound came under some pressure today.
Yes, we had basically Boris Johnson starting to show the first few signs of how he is going to handle the Europeans, and I have to say the first signs are not very encouraging, because he's trying basically to renegotiate a little bit the agreement, and the main stumbling block is and has been the Irish border, and we had basically a reply today from Donald Tusk from the EU saying, look, there's no way we will allow for there to be a hard border in Ireland, end of story. So the Europeans are insisting in their positions, and why not? So we await to see what Boris Johnson is going to do. So, but he has to do something different than what Theresa May has been doing for years now. And so I think market participants are looking at this and are thinking, oh no, not more of this, the same. If this continues, then there's going to be a no-deal Brexit. And also, there has been rumors that the government is going to start a big media blitz about what's going to happen in a no-deal Brexit, how it can be, how we can handle it how they can handle it as a country, and et cetera, et cetera. So the UK is preparing for no-deal Brexit, but they are still going to try to do something with the Europeans, who seem to be steadfast and not moving an inch.
Well, if you're the Europeans, okay, take their point of view. If you're the Europeans, you want to stay steadfast, because you do not want to make this an easy process for anybody just to bow out. Like, Italy's got elections coming up, and what if Italy says, well, look what the UK is doing. They got out easy. I'm sure we could, we could get something similar, and it'll be better off for us. So let's go ahead and go that route. I mean, if you're the EU, you gotta, and this divorce is tough, but do you make it easy on the UK to leave, or do you really stick by your stance?
Yeah.
And it's a tough call. I mean, what do you do?
I think in the end, they want to stick with their stance, but somehow they need to make it, they're going to make some kind of compromise, but make it look like it's a victory for Europe. I don't know how it's going to pan out, but I still think a no-deal Brexit will be avoided. And now, markets are pricing over 50% chance of a no-deal Brexit. If you go to the bookies in the UK, it's from the last time I saw, it was over 50%. I think it's lower than that as a chance. So in the end, something's going to happen. I don't know what, but I think in the end they're going to avoid it. But let's see how it goes.
Yeah, let's hope. And I mean, for everybody's sake, and if there is a no deal Brexit, that's going to bring some unintended consequences, I think, to the markets as a whole, and probably a lot of volatility, which we'll all look forward to as traders. But I'm more worried about the global economy and how it takes that type of situation, if we can take it in stride or not, which I kind of doubt. Yeah. So what else do you see up there that yes. I did notice since you do trade the Norwegian krona quite a bit, I noticed the US dollar Swedish krona, we've been very bullish on this currency pair. If you look at the the bias chart that we've been doing every day, we've just been talking about the US dollar Swedish krona, very bullish setup. It hit I don't know if it's all-time highs, but it's definitely it might be all-time highs. I mean, on the US dollar Swedish krona, what do you think?
All-time highs. 2001, the USD NOK was higher, mate. Good morning.
No, the Swedish krona.
Looking at this krona.
Sorry.
Yeah, no, the Swedish krona. Yeah, no, I know Norway.
Higher in 2001. There is some chance that the same apply to USD NOK. I'm going to check it out and let you know.
Yeah, maybe. How you doing, Steve? Welcome back.
Nice to be back. Thank you.
All right. Is it really nice to be back? I mean, really? I know you're just saying that just to make everybody feel better and like, so happy to be back, isn't it?
Partly, partially it is, yes. I mean,
it's always nice to poop in your own bathroom. I know what it's like. I get it. I'm just going to tell you guys the things that other people aren't going to say. That's the thing that I appreciate about coming home. So, no, I'm sure it's nice to be home and sleep in your own bed, though. So.
No, I had no such issues, but I can tell you that I also being here in the process and everything else, I really did.
Really?
Yeah, and nothing lasts forever, right? That applies to vacations as well.
Yeah. No, it looked like you had fun. We saw a lot of pictures.
Beautiful.
It looks like that's a place that I'm thinking. Next summer I've got to go to Greece. I have to. They're twisting my arm.
I mean, we have an abundance of beautiful places, so that's not going to be a problem finding. I mean,
Right. Yeah, I've got to head out next summer. We've got to see family members. Unfortunately, we're at that age where we're going to go back to see family members, and we don't know if it's going to be that last time. If we can only go every few years. It's not like Greece is a annual vacation for us. But next year, I think my family and I will go, and boy, I'll tell you, that island looks really, really cool. So
I'm driving there, Blake. Am I?
Yeah. Have fun with that.
I'll meet you guys there.
You'll be on some sort of ship.
I can tell you in advance that will be a long drive.
Yeah.
I hope you're prepared.
Yeah.
So anyway, well, Steve, welcome back. I know you got probably plenty to talk about and a lot of charts that you'd like to show off. So I'm going to pass it over to you. And I want to say, everybody, thanks for being here. Thanks for keeping me company the last week and a half, 2 weeks, however long I've been with you guys throughout the mornings. I'll still be here tomorrow morning, obviously, but I'm going to turn over to Steve so he has an opportunity to share his charts and ideas with you guys. So thanks for being here. Make sure you visit our webinar sponsor, which is Forest Park FX. They're always keen on finding you a broker that'll fit your needs. So visit them if you like what we do here. So thank you very much, everybody.
Thank you, Blake.
Thank you, Blake.
All right, see you guys.
Have a wonderful day. Bye, mate.
Okay, a couple of things before you take over, Mr. Steve. Welcome back. So we had first of all, we had the RBA minutes. Broadly in line with what was expected by the markets. The Aussie hasn't done much. They basically leave the door open for further cuts, which again we knew is probably gonna happen. They did say that they expect it's reasonable to expect an extended period of low interest rates, risks to the economy tilted to the downside. Actually, you could take these comments and guess which central bank it is. It's all they're all the same.
Copy paste them on every central bank announcement. Yeah.
They also noted that the Aussie is at the lowest level for quite some time now, and they saw that. From the comment, it sounds like it's a positive for them because remember they're an exporting country, and they said that the recent this fall in the currency is going to support their exports and their tourism.
Of course, and the only negative side effect is inflation, but who cares? 50% the fact that all central banks have changed the methodology so they understate inflation. Add to that the fact that inflating away your debt is always appealing.
Yes.
So who cares about it, right?
Yes, and they did also say that they see very few signs of inflationary pressures emerging. So there you go.
Of course. Yes.
So it's like it's still a race to the bottom for most of the currencies in the world because let's face it, it's easier to create big budget deficits and devalue a currency than to really do the opposite. So speaking of deficits, we had also the other thing I wanted to mention. In Italy, there seems to be a storm brewing. The leader of the Lega Nord, Matteo Salvini, who has recently basically indicated that this coalition with the five-star movement will be no more very soon. So we're heading for elections probably, and probably quite soon. He did say, because they are polling now top. If you remember the previous elections, they were marginally higher, 1 or 2 percentage points.
But now they've opened the gap, yes.
Now they're almost at 40%. So he has a big lead and he wants to do what he wants to do. So he did say today or yesterday, was it, that they need to get a shock fiscal stimulus of 50 billion euros in the budget to bring a growth spurt to the economy and to as they prepare the 2020 budget. And remember, we had this big argument between Italy and the Eurozone, the Euro people, about what percentage of GDP their budget deficit should be. Well, I think we can safely say it's going to be much higher.
Why don't they do it like the Americans do? I mean, they can start throwing things off the budget deficit, calling them of budget items, which for the US it has now become like 60% or 60% added to the real declared deficit. So they can do that. Why not? I mean, come on.
So we have the storm brewing in Italy, and I fail to see any positive scenarios coming out. So again, when I look at the euro, I feel quite scared of it, but it is a funding currency, like Blake said, and with the pound still under pressure, it's very difficult to go short the euro. But if you look at the big picture, it doesn't really look good for the eurozone or for the euro in the medium term, the next, say, couple of years. So, yes, something to look at.
Yeah, euro though, one way or another, for one reason or the other, it's been going through one of the longest quiet periods. I mean, it's been dripping lower. There's no question about it. But just look at the pace. I mean, it's almost like it's, standing still, right? I mean, just we can go back to May 2018. And within like 1 year, we've moved lower, let's say from 115 to 111. That historically is nothing. And just look at this. I mean, there's really no volatility in EUR/USD. At some point, of course, as everything, nothing lasts forever. That's going to change, and we're going to have an explosive move one way or the other. But so
the interesting thing, sorry to interrupt, is that in these past 6 months, remember, we've said it again, we've moved from a Fed forecasting 3 or 4 hikes to 3 or 4 cuts. And still, the euro dollar is just marginally going lower. I think that.
And on the other hand, it's not that the ECB has changed that dramatically.
Yes.
Its tone or expectations. Yeah, theoretically speaking, a year ago they were pointing to a possible end of stimulus by this summer, but it's not like they wrote it in stone or whatever. I mean, So if you think about it, indeed, there has been a much more dramatic change in in the theorized path forward having to do with monetary policy from the US, then from the EU, and still from the Eurozone. I mean, and still, yeah, that hasn't spared any real volatility in the Euro USD and, also in the DXY.
And the dollar in general. Yeah, I think the dollar has a lot of catching up to do. I really do, because rates have gone south very fast and the dollar itself hasn't done that much. So,
yeah, but it's as you said, it's, a lot of people are wondering, you said it yourself, like, what's going to happen? It's a race. We have currency wars again. Everybody's trying to devalue their currency. So, what will that do? I mean, it makes no sense. It's going to have no net effect because everybody's trying to do the same thing. And I will answer, if you're looking at FX pairs, that is a valid argument. But if you're looking at everything, that is not a valid argument, simply because you can have all currencies or all fiat currencies being devalued. Against what? Against real stuff. And that's the point there, right? I mean, yeah, that's not going to change that much, FX balances, simply because everybody's trying to do the same thing. Others, a little bit more successfully. Others have more room. Others have less room. But bottom line, against, real stuff, tangible stuff, that's going to matter in the end. And it's not nuclear physics. It's not rocket science. You don't have to be some kind of a guru to realize that if there is one thing that central banks will succeed and have been succeeding, for a long period of time of doing, is actually that. Diminishing the purchasing power of their currencies.
And Steve, over the past 20 years, we've had a couple of boom bust cycles. And one thing that is steady is if you compare every 5 years what you can buy in the supermarket, let's say, with $100 or 100 euros, and then go 5 years forward, go 5 years forward, it's really, really a lot less every time you look.
Of course,
right?
But theoretically speaking, there's no inflation. And if we are to worry about something, is that we don't have enough of it.
Yes. Okay. Anyway, that's it. So welcome back, Steve.
Universe. Yeah. Thank you. Okay, let's have a look at the chart, because we do have several stuff to look at. Actually, I can start by having a look at a few of your questions, and we might get some ideas if you want to start and from where. Otherwise, I'm gonna. Joe, that's not the case. Metals, okay. Questions about metals. Dylan, anyone cuts along on the USDTRY? We can have a look at that. Question about Aussie, about crude. Okay, as usual, a lot of questions about. I'm going to start from the indices though, and then I'm going to move to the metals, and then we can go to the FX world. Okay, let's do it like this. So. Not a lot has happened since I left for a week, having to do with US indices. I still see consolidation here after a sharp move lower. How do I believe this is going to get resolved? With another move to the downside. So exactly what I was saying before I left, I think exactly the same applies here. Now, is this a triangle? Is it going to happen from more or less where we currently are? Is it going to happen from 2960? Perhaps even like 2970, the 78.6. Nobody can be that precise, but I'm still quite confident that there is at least one more leg missing to the downside, even if that is to conclude a corrective move and move higher once again following that. Not much has changed in the rest of the indices as well. I was expecting a little bit of a higher move from the DAX before moving lower. We actually found resistance at the first area, which is that 11,800. We know how important it is. Produced a lower low. Now we're rebounding again. Keep in mind, 11,800 is going to remain quite a strong area of resistance. Same deal with the FTSE. Very little correction here. I expected, a little bit of a bigger correction. Moved lower, found support at that support area, rebounding again. But in all honesty, I see no evidence that we are done with the DAX and the FTSE and the rest of the European indices moving lower as well. But from a risk reward perspective, I think that US stocks offer a better shorting opportunity since they've been in a consolidation. And as I said, I do believe that it's a very decent probability that they're going to be resolved the downside. And anyhow, given their position, you need to risk a lot less to see if that's going to be the case than shorting European indices at the moment. So I'm still focused on mostly on the S&P. Note that if you have a look at the Nasdaq, for example, you're going to see something much different. You can view this. I was looking at a possible ascending wedge pennant before I left. Okay, it's not a pennant. Perhaps it's some kind of a channel, some kind of an ABC. Doesn't really matter. Something like that. But I do see the same thing as I see in the S&P. A very likely scenario that we're going to move lower from here. Now, having to do with what metals are doing and crude, since it's a commodity. So let's go through them one by one. Let's start from gold, obviously. So I was looking at a bearish case scenario here, simply and for one reason and one reason alone. As I had said, there was absolutely no risk reward in trying to be long after such a huge move higher. So, if you wanted to do something with gold up there, it would be to look for an opportunity to catch a counter trend trade. Personally, I wasn't, I didn't intend to do so. I didn't have a position here. I'd rather buy gold if we see a decent pullback than anything else. Now, if that was an ascending wedge, we're going to find out soon, because we need to see more to the downside. So far, this is just a mild pullback. I mean, we just had 2 days, Friday and yesterday, of pulling back. So far today, it's positive price action. Now, the bottom of this little wedge is at 1482. So at the very least, we might fulfill that target. Now, if gold wants to move lower, then I would be looking for 1450 or even lower than that, 1420. But in any case, after this pullback is concluded, I would be looking for more upside. Same deal, more or less, having to do with silver. When I left, I was looking for a pullback from this little confluence of, they don't exactly confluence, but they were very close to each other. The 161.8% extension of the last corrective move lower, which was at 1757, and the 50% fib, which was at 1749. So we tagged the 50% fib like to the pip, and I was looking for a failure anywhere between those zones that are almost one on top of the other, and the pullback perhaps to retest this breakout. You can see this trend line that we broke above before we move higher. Now, we did pull back. We haven't yet made it to retest this. It's at 1650 roughly. There is a decent chance we're going to do so, but do I think that we're going to move lower from there? I think that the chances are that buyers are going to step in. Now, I would need to see an acceleration lower and a totally different price action for me to start looking for a deeper correction or a more complex move to the downside. Until that happens, you really need to keep respecting the possibility of higher highs. Now, platinum remains one of the weakest metals. As you see, gold has been pushing to multi-year highs. Silver, not at multi-year highs for sure, but it has been breaking out from important levels. Platinum, in essence, remains stuck in a horizontal consolidation. So obviously, if for some reason we see weakness in the metal complex, I do think that platinum is going to be the preferred choice to be shorting. But if you're looking for something to buy having to do with the metals, I don't think you should be looking in this direction. Now, having to do with palladium, before I left, I was looking for an opportunity to be short palladium. If we broke down from this pennant, Obviously, I had left an order actually, which never triggered. Obviously we haven't got that chance. Now, do I think that this move lower is over? I don't think so. So I do think we have somewhat of a more complex pullback, but I would still favor one more move to the downside, even in the context of a larger, which is what I'm looking, corrective move. As you see, perhaps this is like a large triangle. So I think that, the closer we get to the triangle's resistance, the higher the possibility and the best the risk reward that we're going to move lower once again. And, we might see more price action like this. But, still, if this is a triangle, which looks likely at the moment, still within the confines of this triangle, which is rather large, there are money that can be made, right? So, for example, I have this resistance area here at 1500. I think, it's probably a very decent sorting opportunity. I might actually take a stab there. The 50 daily moving average is also there. So I do think that Palladium might come into play once again. Short side, as I said, looks appealing. And, last but not least, having to do with the metals that, I frequently look at, is copper. Copper still consolidating just above like key support area here at 255, 254, 255. If we break lower, which looks, very likely, especially if we see some kind of an escalation of the risk of move, which lately has been associated with the US-China developments, I think that it is extremely likely that we're going to be moving to the next objective, which is at 244. So copper definitely remains under pressure, and especially if we consider the fact that, from a technical perspective, I do see the potential for more downside here in the indices. That is likely going to be at the same time something that will trigger it, will probably take copper with it lower. Not absolutely certain, but with a decent probability scenario. Now, having to do with crude, crude is probably in a larger consolidation. Initially, I was looking for a smaller corrective move, but look at this. It looks now like a triangle. I mean, a flat bottom triangle. We have this horizontal support area at 50.5, and we have this descending trend line resistance that currently passes roughly from $58. Still quite a large area. I mean, it's like $7.50 from resistance to support. Resistance, of course, keeps moving lower every single day since it's a descending trend line. So within these boundaries, you can still keep playing this shrinking range because, as I said, it's still large. So, for example, every time we move closer to 58, there is a decent risk reward that you want to be short for another move towards 50.5. But in all honesty, I would rather play a breakout. So, for example, breaking out above, like, there's also horizontal resistance area here at 57.75. I think that playing a breakout for another move to the upside there would make sense. Also, playing a breakdown from 50.5, which we should see some extension lower. I'm not interested to do anything with crude as long as it keeps oscillating, between these two trend lines. I'd rather get involved with other stuff. Now, before I thought that Blake was, because I was doing other stuff, was talking about USD NOK, but he was actually talking about USD SEK. So I might as well talk about USD NOK. USD NOK has found resistance here at the 161.8% extension of the last corrective move lower. Keep in mind, which is extremely important, that it remains above this multi-year corrective move. You can see it here, right? So this definitely keeps it in bullish mode. Especially for some reason we see more crude weakness even, towards that 50.5 area that we were talking about, it's a good possibility that USD NOK is going to propel higher once again towards this ascending channels trend line of resistance, currently passing, from just below 930. Bottom line, USD NOK remains, a buy on dips, currency pair. And I know that, Blake mentioned before that the same might apply to USD CAD. Yes, it might, but there is clearly more weakness in NOK than we can see here in CAD. Just compare the two charts. I mean, one of them is at levels that we've only seen once in the past. If I remember right, it was 2001. Moving likely towards all-time highs. The other one is nowhere close to that. So obviously, especially if you want to play one of them as a proxy for crude and you're looking for crude weakness, I think that USD NOK is the one you should be looking to trade. Now, USD CAD, as you see, has stalled multiple times below this 61.8% fib. Yes, it can easily break out from there and make it to the next objective, which is close to 134.5. But if for some reason it fails from here, it can also come down and retest this long-term ascending channel. You can see it here. I mean, it's from a technical perspective, it's extremely important. If I had to do something here with the USD CAD, which I don't want to, I don't think it's at a good juncture to do something. But if I had to, I would probably be short simply from a risk-reward perspective. Okay, not from a from the perspective of expecting a move. I don't really like where it is. It can literally go both ways from current levels, but from a risk-reward perspective against this 61.8% fib, it would be appealing. So if for some reason you're looking for CAD strength, at least from a risk-reward perspective, where you're wrong, which is more than somebody can say about other currency pairs at the moment. Now, having to do with the cable, not really good news here. This might be another consolidation, bearish consolidation, might be a triangle. It's too early to say. If it's a triangle, we're going to know quite soon. But, I keep repeating myself and I keep remembering me repeating myself every time that, cable breaks down, we find some kind of confluence of supports, which is only good enough to stabilize the pair for a few days, a few weeks at best case scenario, and then we move lower and then, rinse and repeat. So every time then I give a resistance area, which, I say that unless we move above it, I have no reason to be bullish, and we never move above it. So, this area has been, in this case, 123.73. So far, there is really no strength here. I mean, we haven't even made an attempt towards that area. So, the longer it takes for us to get unstuck from this confluence of supports and make an attempt to test that 123.73, and we don't do, the higher the probability that we're just going to, slice through support without even rebounding, just consolidating and make it to the next objective, which is the 161.8% extension of this last rebound at 117.5. So, any way you slice it, the pound does remain one of the weakest currencies out there. And if you have a look at the pound yen, you're not going to see something different. You're going to see the same thing. And when we even slice through this descending trend line support, in this case, so far, it seems like it's acting as resistance. So, we might have the exact same price action here, with the only difference being, if you expect more risk of, at least in the short term, then pound yen should probably even underperform a pound against the US dollars. Now, if we want to have a look at the USD yen, you can see that despite the rebound, price action really doesn't look that bullish, right? I mean, we're still trading below the last consolidation, which, we broke the downside. no idea yet. This might be a pennant. This might be, some type of other corrective move. But, the longer it takes for us to rebound, the higher the chances that we're just going to move lower again, right? Towards lower objectives. We can fib extend the last rebound. And, for example, we have the 127% extension at 102.50. So, yeah, why not? I mean, 102.50. Now, where would I be worried about something different happening? Probably if we make it up to this broken channels support and it doesn't act as a resistance and we break above it, then something else might be happening. But until that happens, I do think that it looks very decent to the downside. Add to that the fact that, bond trades are overcrowded. Yes, they are. Bond moves have been overextended. Yes, they have. But is there really some type of an indication that we found a high? Take the US Treasuries, for example. I wouldn't think so. I mean, yeah, we are testing resistance, but look at this. So far, just a consolidation. And look at the yields. Because USD yen is highly correlated to the yields. Unfortunately, USD yen is not that highly correlated anymore, neither to risk or yields. I mean, it's not following like very, very closely. It does get affected, but it's not following that closely anymore, neither one or the other. Anyhow, yields and performance of the S&P, for example, which is a benchmark barometer for risk globally, has also decoupled since some months ago. And now USD yen seems to have been decoupled from both of them, in some extent.
Hey, Steve. Excuse
yeah.
me. Welcome back, buddy. Great to hear your stuff. Can you show that bond chart again that you were showing that there was no sign of a top yet?
Absolutely.
It was a chart before this you had up there.
Absolutely. But before I do that, give me one second because I just overlaid.
Oh, okay.
USD
yields?
yen with yields. You can see it here. So I want to zoom out so it actually gives us a better picture of the correlation because, okay. So there it is. Now you can have a good sense of it. So as you see, correlation was quite tight up to this point at the very beginning of 2018. And then we had this weird decoupling. Actually, for some months, US yields were inversely correlated to what USD yen was doing, which was extremely weird. Then we started following again.
Right.
Of course, the gap had remained in a big extent from this little period of like 3 months, whatever it was, of the inverted correlation, which was extremely weird. Then the correlation went back clearly to positive. But as you see now, during the past few weeks, we've been again somewhat lagging. I mean, US 10-year yields have been moving lower, while USD yen has been somewhat rebounding. So we have again here, we're creating again a gap here, and I want to see how that's going to work out. Now, tell me again, Coach, what do you want me to show?
Oh, that U.S. Treasury chart.
There we go.
Bond chart.
Here
I think it was a long. Okay. 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 You showed the little divergences there. To me, it looks like a 2. So I'd take a shot at a new high.
Yeah, might be the case.
Spec, but you see, we have a 2 there, so maybe one more shot up in the bonds.
Might be the case. We have.
I think Jamie had a 150 target in TLT, and I think that would be commensurate with the 30-year making a new high up there.
I do think that bonds at some point, sooner rather than later, should pull back. Now, what kind of?
I think Powell has to be super dovish for that to happen. Talking about maybe 50 basis points, maybe going in, before the meeting. So it has some more impact.
One thing is for sure, it was Trump that was asking for 100 basis points of
He'll give him half.
Yeah,
he doesn't get demoted.
Let's see. And here's the 30 year, by the way. Let's see. I mean, I remain very skeptical, but if there is one thing I remain mostly skeptical about, as you know, since like a year ago, is that I do believe that the economy has completely run out of steam, globally speaking. So we know that they will keep pushing it, hoping it will make it by the end of next year. Now, will they succeed? I don't give them high chances. I probably give it less than 50% chances, because it's one thing what you wish for and one thing what you're going to get. So let's see. I find it very doubtful that we can go through another whole year and this not collapsing, but whatever, we'll find out. And here's the DXY, by the way. DXY still in this annoying slow move higher, still remaining within this ascending channel, more or less the inverted picture of what we've seen the Euro USD. Yeah, exactly. One thing is for sure, this move higher doesn't have any momentum. So it feels like at some point this will break down. Now, is this the point? I don't think so. I mean, doesn't look like it's ready. But we definitely have this channel to pay attention to, and this previous low at 95.84. So I do think that if we do see a break above 95.84, there is a very decent chance that the ball will start rolling. Now, if I might briefly, you have a guest. Okay, I'll just cover two things very, very fast, because we have somebody asking. EuroCAD, I don't like this. Why would you want to trade it? Still, if you do want to trade it, we had this descending wedge, one move higher. Perhaps there is one more move to the upside left. But really, why would you want to trade two weak currencies, one against each other? I think
it's barely worth making our guests wait for commentary on that.
Indeed, you're right. And the same deal about pound CAD. So you can start. Pound CAD might be breaking above a descending channel, but remains very weak. So I don't know. Probably you're looking to play the reversal. I wouldn't. It can rebound, but I wouldn't be playing that reversal. So thank you, Dale. I'll be back tomorrow. When we'll have
great to have you back, Steve. And remember, happiness is wanting what you have instead of having what you want.
Oh, I totally agree with you.
All right, think about that. Anyway, hi, Chris. I'm assuming that's you, Chris Schmidt, and I'm going to promote you to panelist. If not,
you're going to be a surprise.
You're going to be a guest whether you like it or
exactly.
not. All right, Chris, you're unmuted. Can you hear me? And you need to activate your mic. Pretty sure that's you.
Or
maybe not.
Let me
check. Let me check.
Use the chat to tell us if. Oh, there's a great question. Do you want me to start answering a question that we have until you get that resolved?
Sure, go ahead, because I'm not even sure if that's the Chris I'm looking for. Go ahead.
He's asking a very nice question. With the dollar being the reserve currency, what advantage does that give the US? And is that why other countries want the rates lower, because of the US having the reserve advantage? That's a wonderful question, actually. First of all, the advantages that the US has for having the reserve currency are huge. Huge. There is also one problem with that. The problem with that is that those advantages have permitted the US to be completely reckless, as the years pass, having to do with fiscal discipline. Okay, because one huge advantage is obviously is that it issues debt in its currency. So theoretically speaking, the US can never, if it wishes, it can never default because it owes everybody dollars, and there is absolutely no restriction in how many dollars it can print. Okay, of course, there will be consequences, for printing like, endless amount of dollars, but nobody can do anything about it. So theoretically speaking, if the US wants to repay everybody back tomorrow, it can do so. So the US can never default. That's one huge benefit. Another huge benefit is that there is a high demand for dollars because it's the reserve currency, which means that there is a high demand for US bonds because US bonds is a promise to pay dollars in the future. So, we go back to the first point. And definitely at some point when the US loses the reserve currency status for the US dollar, and it's going to happen. How do we know it's going to happen? Because it has historically happened to every single currency in the history of mankind. Okay, usually we have reserve currency status for one currency or the other, lasts usually for several decades, and then for one reason or the other, might be a self-fulfilling prophecy as well. It's exactly what we said. You have a huge advantage by having the world reserve currency, and usually politicians end up taking advantage of that until the point that people do not trust your currency anymore to be the world reserve currency, and then something else comes and takes its place. So yeah, I think I covered those points and answered your question.
Okay,
and,
well, I haven't been able to track them down. Chris, if you could hear me, not Ferris Bueller, DJ. Do I sound like the professor? Bueller. Bueller.
Now,
Chris, go ahead.
Having to do with other countries, that the second segment of the question is, other countries depends. Emerging market countries, because there is no high demand for their debt, many of them have to issue debt in US dollars. Okay, so investors at least don't have to worry about, besides taking a risk having to do with the ability of the country to repay back its debt, it having to take the FX risk. Because let's assume that you bought some Turkish bonds and you didn't buy Turkish bonds denominated in dollars, you bought Turkish bonds denominated in Turkish lira a few years ago. So no matter how much those bonds were yielding, you would be underwater at the moment. Why? Because the Turkish lira got severely devalued. So yes, weak countries, emerging countries have to issue a lot of debt in US dollars. So that is something to take into account, having to do with what happens to them with dollar movements. But it's that means when the dollar moves higher, their debt becomes even worse, and that's why emerging market currencies get seriously affected by severe dollar appreciation, because in essence the debt burden of those countries becomes worse, and then it's an issue for the whole economy, and so on and so forth. Now, having to do with everybody's intention to devalue their currency, it's very, very simple. Nobody wants to find themselves with a strong currency against others, because it gives you a disadvantage having to do with trade. It's as simple as that. So, Coach, what happened with the guest?
I'll do it one more time. Chris, if you're in the house, let me know through chat or questions. And I'm looking for Chris at Balding's World. Are you here, Chris? Going once, going twice. Okay, my pet peeve: say what you mean and mean what you say. So I communicated with him yesterday. All right, well, maybe it's a Chinese tactic. is that you set up an interview months ahead of time, you confirm it the day before, and then you don't show. So it's a little aggravating. All right, everyone. So that's a wrap. Steve, do you know how to close the show with our tagline? And
Yeah.
we got really a nice testimonial from Simon, who's a member. And I'd like to, I know there aren't as many people here as were before, but Simon is a part of our community. And he said to Dale, not for the public, so I'm breaking his word. I posted this in the chat room too. I think this panel isn't public, and the quickest way to get a message to Dale. Thanks for all your support, and your 3 drives RSI divergence will stay with me forever. The ForexAnalytix community has had a greater impact than it understands. A great team. Continue to soar and carry us all on your wings. Isn't that nice?
It is.
Okay, so you could have a similar experience. Sign up today and invest in your trading future. And with that, go ahead, Steve, close it.
Don't just count your pips, count your blessings, right, folks?
And you have many. With all those videos and photos that I saw of you and your family, beautiful family on vacation, Steve, you are a rich man.
Thank you, Coach.
All right, buddy. All right, so that's a wrap, everyone. Good hunting the rest of the day, and we'll see everyone tomorrow. You're very welcome. And love all you guys, and we're always rooting for you. Adios.